Right guys, the first video, what is Forex trading? Now some of you guys are obviously already going to be in the industry, you know exactly what Forex trading is. But there's also going to be some of you guys that are brand new to the industry, so it definitely is a topic that needed covering. So the Forex market and Forex trading is essentially the buying and selling of different currency pairs on a global market that operates 5 days a week, 24 hours a day. So essentially the market is going to open on Sunday evening at 10 p.m. and it's going to operate all week until it shuts at 10 p.m. on Friday night. So the market is not moving and shut over the weekend, unlike the stock market or the crypto market that operates 7 days a week. Now the FX market is made up of 8 major currency pairs. We have the Kiwi dollar, the Aussie dollar, the US dollar, the Great British Pound, the Euro, the Swiss franc, the Japanese yen, and the Canadian dollar. Now, what we will be doing is trading a combination of these different pairs. So for example, if we have NZD USD, we will be trading the New Zealand dollar against the US dollar. If we have CHF JPY, we're going to be trading the Swiss franc against the Japanese yen. But the easiest way to explain this is obviously going to be over on the charts. That's what we do best here at The Social Traders. It's all about the charts. So without any further ado, let's jump onto the charts and take a look at this in a little bit more depth. Right guys, so now you join me on the charts. And what we're going to be doing is taking a look at a few currency pairs, as well as a few different terminologies and how the market actually moves. So if we look down the right-hand side of the screen here, you can see that we do have an abundance of different currency pairs that we just spoke about. So for example, we have US dollar against the CAD, we have Euro against the Kiwi, we have pound against the CAD, Aussie against the dollar, and so on and so forth. There's many different combinations that we can use here, but these are the ones that we tend to focus on as they have the best sort of price action and they are the easiest to read. Now you can also see that we can trade things like gold, and we can trade silver, and we can also trade oil as well. And if we look at the very top of my watch list here, we can see that we have the DXY and the JPY basket. And these are essentially indexes where they are purely focused on the yen or the dollar in this case, and we can use them to figure out the overall strength or weakness of the dollar or yen. And we will touch upon that a little bit later on within the course. Now, if we focus on the currency pair that I have on the chart here, you can see that we have Euro against the Japanese yen, we have EJ, or we have Euro yen. There's obviously a few different ways that you can say it. Now, what that essentially means is the currency pair on the left-hand side, which is the Euro, is our primary pair, and the currency on the right-hand side is our secondary pair. So if we are to sell the market here, we are predicting that the Euro will become weaker than the yen. And if we're looking to buy the market here, we are predicting that the Euro will gain strength over the yen. So what we can actually do in the currency market is we can buy and sell a currency pair in order to profit. So for example, if we took a sell position from up at the top here and the market moves down, we can actually make profit that way. And if we bought the market at the bottom here and it moves up, we can make profit that way. So it's a very, very liquid market with around $7 trillion traded every single day. So there's actually an abundance of different opportunities every second of the day. Now, what we also have is different terms for whether the market is moving up or whether the market is moving down. So for example, if the market is moving up like this is actually what we call a bullish market, or the market is looking bullish. If the market is moving to the downside, this is what we call a bearish market, or the market is bearish. So there are some different terminologies that we can use for our overall direction within the market. And we also have different terminologies for whether we're buying or selling. So if we are looking to sell this leg of price again, for example,
we can actually say that we are looking to short the market, or we are looking for shorts. And if we are looking to buy the market, we are looking for longs, or we are looking for long positions. Okay, so if we are selling, we have bearish and shorts, and if we are buying, we have bullish and long. So if you do see those terminologies and those words throughout the community, or whether we're talking about something, now you know what that means. So hopefully that helps, guys. Hopefully you can see the different currency pairs there, and how we kind of pair them together. And hopefully you understand now that the market is always moving up and down, and we can make profit whether it is moving up or down or sideways. You know, there's so much opportunity within the Forex market.